Hello everyone, it's me, the Boss Hog. We're back with our second video of the month, on track as per the plan, so that feels pretty good. We've got lots to cover at an all-time high in terms of wealth building. The only thing that's really different this month is I have removed our dividend overview, just because I moved that into my portfolio video, which is a bit more complete, I think, and now monthly. So if you're interested in dividends, that's the place to go. Otherwise, let's talk about how the wealth building to 5 million is going. All right, so in terms of how we're doing overall, pretty decent. We had a really great month. In terms of month on month, we're up 17,000. Typically at this stage of the journey, we want to be adding about 10,000 a month. So adding 17 means that we're ultimately catching up. Now we are still a little bit behind at the moment on what we were planning, but to be honest with you, I'm broadly happy with the direction of travel. In hindsight, when I first set these targets, which was over 3 years ago now, on reflection, I accept that I was too ambitious at the beginning and probably too prudent in the long run. So even though I remain a little bit behind, I'm kind of a bit optimistic that we'll start to catch up as 2024 goes on. There's a couple of reasons for that. Ultimately, it's linked to the fact that I was very prudent when it came to my wife and my salary increases. My income doesn't include any bonuses in these projections, so therefore that's also fairly prudent and, if anything, overly pessimistic. So I'm hoping that over the next year to 3 years, we should really sort of track this down quite aggressively. I also get my bonus in March, so that should make a bit of a contribution. And yeah, definitely I expect sort of over the next couple of years that we will make this progress back. To be honest with you, the main thing that's really worked for me over the last couple of videos has been the year-on-year increase. This is huge. And to be honest with you, I only added about 76,000 of my own money last year. So the fact that this is up, 130, there's the market doing a lot of good work. It has been a pretty good year, I would say. So that's definitely very helpful. But we feel pretty good, especially as we approach our, I would say, second big milestone. I did celebrate a little bit of 250. 500 is our second milestone now. I think that still counts. And very happy how we're doing against our trajectory, to be honest with you. So even though we're slightly behind, everything this month moved in a positive direction. We even had our first premium bond win, which felt pretty great. Only £50, but only is £50 puts us back at where we should be from an odds perspective. So again, I was actually quite excited to win £50 premiums bond prize, and everything else was pretty much in line with expectations. So we've just been chugging along, enjoying what has been a fairly friendly market, although I haven't kept up with the S&P 500, but still a fairly friendly market, and again, everything moving in a pretty positive direction. But there have been a few changes in terms of breakdowns, so we're going to discuss that now. All right, so in terms of the plan for 2024, just as a reminder to start with, so the figures there on the very far right, that's our 2023 total. Actually very happy with the eventual number there, helped by my wife's bonus in December. This year we're aiming for 100. Now, for anyone who watched this version of this video a month ago, you might have seen that target for 2024 was 97, and I was sort of in my head looking at how I could actually get to 100, which is quite ambitious, to be honest. I won't be too disappointed if we don't hit 100. I think that's really ambitious. It has a sort of 50% almost, or 45% or so savings rate, which is again very ambitious. But we're going to try and hit that and not be too disappointed if we miss out on it. The big change really is what's going to be happening with my bonus figure between March and April. So again, I'm getting my bonus at the end of March, so that feels great. But originally I was sort of going to just take the hit from a tax perspective, and I'm at a very awkward tax threshold where basically my entire bonus would have been taxed at 62%, something like that. So what I'm going to do is I'm going to sacrifice a significant part of it and put it into my pension. So what that will mean, though, is because of how the pension rhythm works in terms of when it gets paid in, is actually that bonus will more or less show up in the April figure there that you can see for 10/7. So there'll be a little bit of a delayed income when we're talking about this video in a month's time, but overall this means that I get to keep about £8,000 more of my bonus. Admittedly, I won't be able to access it right for a couple of decades, but honestly, I really dislike paying tax. I really feel like I pay plenty of tax. So this is my way of getting past that as much as possible. All perfectly legal for anyone who I guess is in the UK should be aware. Just basically salary sacking it so that the bonus isn't liable for income tax and indeed national insurance. So that should be really good. And then I also, again, get the tax contribution on that. Unfortunately, my employer won't match any bonus, which is fine. I don't think that's super uncommon or anything in the UK, but still, it makes sense for me to do so. So that's going to have an impact there. There were a couple of nice things this month, though. So my wife got a pay rise, as I think I mentioned before, and that's why her pension contributions is a bit higher there. So that's perfectly in line with what I was expecting. So that's a nice little contribution as well. I would say outside of that, it has been a relatively slow start to the year, and the fact that we're only at 8.5k after 2 months, so obviously a sixth of the year, and our target's 102. Part of that is the impact of bonuses, right? My wife's in December, mine in March/April. But we've also had a fairly heavy start to the year in terms both my wife and I had a tax bill. I've also fully paid my holiday in April, so that was sort of 4 grand as well. And there's been a number of other payments like quarterly payments, half yearly payments that all landed in January. So we didn't have too much money in order to hit this number. But again, you can see that once we get going, it's sort of 7k a month. And again, we should be able to do that. I think if we're not doing it, we're not going to be too far off. And again, I think for me, like if I was below 90, I'd be disappointed. But if I'm below 100, I think it's okay. And yeah, we'll just see how we go through the year. So to be clear, I also expect March to be a relatively modest figure compared to once things get up and running. But we'll see. The reason, by the way, that March is a bit low is that my wife and I have got like our 13-year anniversary. So toward the end of February, a bit frivolous with our spending. We had nice times out, etc. And like my wife wants to update her wardrobe, then we want a new sofa, those kind of things as well. So there's an expectation that we're going to spend a couple of thousand on I don't know, lifestyle spend that we won't spend too often, but we're going to sort of put it into the first quarter of this year again before things start to open up a little bit more in the other quarters. So I think that's okay. That's the plan. That's not a big surprise really, and I'm broadly absolutely fine with these numbers year to date. All right, so the graph in the top right is quickly becoming my favorite graph in these videos. It just looks really good, I think, in terms of the direction of travel, and especially as we get nearer to our 500k. As I think I'll mention for the final time, because I mentioned last month, there's a couple of new bank accounts here in terms of our monthly saver. So that I can put £200 a month into, and at the end of 12 months, I get like a 5% interest rate. And the other one, which is better, is it's capped at 4,000 sadly, but that's 7%, and I get that paid on a monthly basis, so that's very nice. And as soon as I get it paid, I just transfer it into my main bank account. It's all in the same Santander account, so that's really nice. Also, now our debt arbitrage here, so you can call it stoozing, but ultimately I put a bunch of money on a credit card because it's 15 months, 0% interest free, as I'm making the minimum payment, which is about 1% of my debt per month. And I also actually get a little bit of cash back as well, so that's been very nice so far. Decided here to stop at 12k. My credit limit's 13.2. Funny amount, I know, but it's exactly 90% of my overall credit limit. And what I agreed with my wife when we first did this was that we would do this as long as we had liquid cash available to cover it. So that includes things like premium bonds, like the stuff in the cash savings, etc. So, and this is 0% for another 11 months, I believe. So again, a little while till that comes due. But we feel very good about that actually. That's I feel fairly comfortable. I think my wife is increasingly comfortable. I would like to do it so at the end of the interest-free period we can just find another interest-free period. Have a very good friend who's been doing that with credit cards for many years. But again, I think here we're doing it as a bit of a trial. My wife isn't fully comfortable with debt. And we will. It's important that your partner in these things is comfortable. So if she decides at the end of the 15-month period that actually she'd rather just pay it all back, then we'll be able to pay it all back, and it'll be no big issue. It still would have been a good opportunity to take advantage of some arbitrage, as well as sort of the impact of inflation, right, which is constantly making this debt less costly than it has been in the past. Outside of that, I expect the other category, so the green there, to increase over time. And that's mainly because anything to do with cash is linked to other. So as we put more stuff into our premium bonds primarily, which is going to be our medium-term storage for our emergency fund, I would expect that number to increase. And to be honest, because it's fairly tax efficient, especially after you sort of hit your ISA and your pension targets, in the, let's say, long term, like 5 years, I would like to think that we will have 100k in premium bonds, just me and my wife, and sort of just hope that we win something big. But if not, then the sort of 4% odd average is very competitive because it is no tax on it. Anything else we can get is going to be taxed at sort of 40%, and therefore would have to have quite a significant return to find something better than that. So yeah, overall here, all of these are moving in a really positive direction year on year. Some of the changes are quite big, right? We got rid of my wife's people's pension and consolidated it into Nutmeg, and then obviously we've got the new accounts, let's say, linked to our emergency fund and everything around our cash savings, etc. But again, another really good year on year increase and breakdown here as well. Okay, and then lastly, in terms of capital added, so nothing added into our ISAs here, which is the trading 212 shares. I guess in fairness, that does also include a general investment account, but I have no intention of adding to anything outside of tax wrappers over the long term. So nothing added into trading 212. And I expect that situation to remain for March as well, because ultimately the ISAs are full and therefore we aren't adding anything currently because we can't. In terms of rounding cash saving here, so originally or last month I had 2.1k in my Virgin Money account for savings, and I rounded that down to 1,000 and basically moved it over to Santander in the middle of last month just to make sure we had enough money for a few things. That was offset with £200 that I added into our monthly saver into Santander, but ultimately that's the reason for the cash savings being minus 900, right? Minus 1.1 plus 2 gives our 900 there. And what we basically did at the end of the month is we moved 4k into premium bonds. So that's where most of the focus has gone. Again, speaking with my wife, she really likes the idea of premium bonds, actually. Safe money, no exposure to the market, which is where a lot of our current wealth does have exposure to. And the excitement of, logging in on the second of the month and realizing you haven't won anything is something. And again, I'm laughing about this, but I won my first money last month and it was pretty exciting. So most of that went into premium bonds. And then last but not least here, we have the withdrawn amounts. So again, I agreed with Wifey several months ago to look at cold hard cash. And what this means is it's sometimes nice to get income from sources without having to wait for 20 years before we can enjoy it. And part of that agreement was that we would use dividends outside of tax wrappers, basically, so including this one, to go for a drink, go out for a dinner, whatever. And again, this went toward our 13-year anniversary, so that was all very nice. But that's the reason there for the withdrawal. So, yeah, again, overall not a huge amount. And just as a reminder for anyone who's new to these videos, this amount doesn't include the pension contributions and one or two other things as well. So it's slightly different to the overall figure for wealth contribution. This is sort of the capital that I personally added, right? It went from my bank account to somewhere, or came into my bank account in the case of things like a withdrawal, whereas elements of the pension, for example, that gets taken from my salary or my wife's salary before it's ultimately into our bank account. So they're slightly different in terms of what they measure and how they contribute from that perspective. But this is basically our capital added over the last month, so a little over 3k. Again, on the more modest side of things in the long term, I expect this figure to be more like 4k. Into and maybe close to 5k in latter parts of the year, but for now we're getting up and running, and again I'm absolutely fine with this and actually pretty happy with the 4k premium bond contribution especially. All right, and then last but not least, things to do for 2024. So we already had this conversation with my wife's pension contribution, went up exactly the right amount that I was expecting, so it's good to know that I understand how pensions work. That was a good thing. Unfortunately, my Nutmeg move to Hargreaves Lansdowne for my daughter's ISA is not progressing. I do need to definitely put some effort into doing this. If I'm honest, until I did this video, I'd completely forgotten about this. So I will add it to my Todoist, it's called, basically some life admin that me and my wife use to not forget things. So this will get added to that and I will try my best to prioritize it. What has gone well is the ISAs, so already touched on them. Originally expected to be March, but I brought it forward to January just because my brokerage started to pay a reasonable amount of tax protected interest rates, so savings rate. Then I did do this already, which is a review of my private pensions. I was kind of spurred because when I got my pension performance through, and my Nutmeg pension is basically isolated. I'm not adding any capital to it. These are my previous pensions that are consolidated. And even though it went up like 11% last year, which on the surface was pretty good and is better than my long-term expectations, I was a bit underwhelmed basically because On Nutmeg, I have the most aggressive risk I can take. I have the lowest scores for ESG I can take. And then when I actually got to grips with like looking at where my money was, I was incredibly underwhelmed. Like 20% of it was in ESG funds, something like 35% of it was in UK funds. And I was like, this is not exciting. It's not high risk at all. And I had like the highest and the most extreme I could have. And apparently they can't really do anything else for me. So this with a combination of the fact that I can get fees cheaper elsewhere now, specifically because my account's above 75,000, that seems to be a bit of a milestone where you can get better management fees elsewhere. I've decided already to transfer this. It's in the process at the moment of moving over to Vanguard. These things apparently take 10 weeks, but again, I've done everything I can do, so we're just waiting for that to go through at the moment. But that's at least a month ahead of schedule, so relatively pleased with that, and that was the impetus for getting me moving on that. Build an emergency fund, we touched on it. So overall at the moment, like when you actually look at the credit card money and then the sort of cash and cash equivalents to cover it, there's a net delta of about 11,000 positive. So ultimately here we need to add another 24,000 to that figure. I think that's quite ambitious. We basically have to hit our 100k wealth contribution to have any chance of doing it. And again, to be honest, if I'm salary sacking and then potentially if my wife does as well, then we probably won't hit this number this year. But to be honest, as long as we're making relatively good progress, I'll be quite happy. Especially because like when I talk about an emergency fund, like I could, for example, raid my £200,000 almost in my ISAs, right? My wife and mine. I'd just rather not touch that money. I think for obvious reasons, you don't want to take it out of a tax wrapper. And likewise as well, I think me and my wife, we earn not dissimilar amounts. If one of us lost a job, it would probably more mean that we would fall behind on our investing, not that we wouldn't be able to pay our mortgage and things like that. So I'm relatively relaxed about when we hit this, but to me, like I'd like to make very good progress. And then if we miss it because we've decided to salary sack into our pensions, our bonuses and things like that, or made other financial decisions that were sensible, then I think this is completely fine. So that's the target still. Again, I think for me at least, I want to be ambitious with my targets. But if I have a slight shortfall here for those reasons, I won't be too worried. And again, as we touched on already, but this is the big one for the year. Even if it is ambitious, it's good to have those targets. So yeah, that's everything for end of February. We're pretty happy with how things are going, even though on the surface it looks like a fairly slow start to the year, because it is, but it's expected, and I'm absolutely fine with how things are going year to date. So that's everything for today. Thank you very much, everyone. I've been the Boss Hog, and good luck with your wealth building. Bye for now.